This is the only gold trading strategy that you will ever need. So in this video, I'm gonna show you how to make $1,000 a day trading gold. So the strategy that we'll be using is called supply and demand. And the whole gist of this strategy is that we're gonna be looking for aggressive buying and aggressive selling. Because you must understand that we retail traders has no power to move the market. So we must follow the rich big boys, or rather the smart money. Look at this example on the right. You can see there's a lot of aggressive buying right now, and you can also observe that there is multiple green candlesticks in a row. So when price come back down to retest this level right here, you want to be entering for a buy, because the rich big boys who push the market up initially are going to buy more when price come back down to retest this level. So when that happens, you want to be able to ride the uptrend with the big boys, or rather the smart money. So on the left hand side, we got your supply example, right? So as you can see, there is a lot of aggressive selling on right here. Price has just been dropping like crazy, and there is multiple red candlestick in a row. So this tells us that somewhere around here there is a supply zone, because this is where the huge downtrend started, right? So now what we want to do is to wait for price to come back up to retest this supply zone, and then we can enter for a sell somewhere right around here, so that we can ride the downtrend with the smart money. So there are two reasons on why this strategy is so powerful. Number one, you are following the rich. You are literally following the trend rather than trading against the trend. You are following the smart money concepts which move the market. Number two, you can use this strategy in every market conditions. So it doesn't matter if the market is going sideways, ranging, or is trending in an uptrend or downtrend, or is it reversing? It doesn't matter. You can use this strategy from any of these market conditions. So the first example I'm going to show you is in a ranging market or a sideways market. As you can see right now, price is not going anywhere. It's going up, down, just consolidating and going sideways. And most of you guys, when you see this, you are not going to be trading this, right? Because I told you guys multiple times that you should not be trading when the market is going sideways, because there's like less opportunities. But that is not the case when there is supply and demand, because you can trade ranging markets when you are using this supply and demand strategy. So right here, what we want to do is to identify like a supply zone first. So you can see at this point, there is aggressive selling. How do we know that? We observe these candlesticks being formed right here at this area here. You can see there's a few red candlesticks in a row, and there's a huge red candlestick right here, which tell us that there is a lot of selling pressure at this area, and the smart money, they are definitely selling at this area here. What we want to do is draw a box at the start of this like selling pressure, this selling movement down. So I can draw a box like maybe somewhere right around here like this, because this marks the start of this supply move, whatever you like to call it, like this, basically this big downtrend here. Since we have marked up our supply zone, which is somewhere right around here, the next step is that you want to wait for price to come back up to retest this supply zone, and then that is when we can enter for a sell, and we can short the market down and just ride the overall downtrend. So in this case, price has not reached up to the supply zone yet. So what you want to do is to be patient and wait. The last thing you want to do is to enter for a sell here recklessly, because you feel a bit of FOMO. You see that, oh my god, everyone is selling at this area, I should sell right now. No, if you want to get a sniper entry, you must be patient enough to wait for price to get to a nice key level, and then that is when you can enter for the trade. So right now, we are professionals, so we're just gonna wait. And you can see right here, at this point of time, price has managed to go up to our supply zone. When price is at the supply zone, I'm looking for a few things. I need confluences that tell me that price is going to reverse at this supply zone and head back down. Then that is when I can enter for the trade. Because remember, there is still a chance that price will break through this supply zone, and we will have to cancel this entire trade setup. So the first thing I'm looking for is your moving average crossover. That will be my first confluence that tell me that, you know what, this little retracement, this little retest done, and price is going to reverse and head back down. So at this point of time, I'm going to be waiting for the moving average to cross over. Right now, we are on the 1 hour time frame, and if I'm going to enter for this trade, I'm going to be entering on the 15-minute time frame. So I'm looking for a moving average crossover right now, and the second thing I'm looking for is actually a candlestick pattern. I want to see some sort of candlestick pattern that show me that, you know what, the market is going to be reversing at this supply zone. So we still wait for a second sign, and you can see right here the moving average is starting to cross over the candlesticks. How do we know that? You can see the candlesticks are getting below the moving average right now compared to last time where the candlesticks are above the moving average. And by the way, the moving average that I'm using is actually the 9 EMA, or you can even use the 8 EMA. Actually, I love to use the 8 EMA, so you know what, for the sake of this video I can just use the 8 EMA. So I just use the 8 EMA, and then at this point of time I'm waiting for the two factors, which is a candlestick pattern and also your moving average crossover. So we still wait, and right here guys, this is where I will enter for my trade, because I see a huge red candlestick right here, which tells us there's a lot of bearish pressure, a lot of selling pressure pushing the market down, and also the moving average crossover right here. You can see like the candlesticks start going below the moving average. So this is where I will have entered for the trade, when the moving average starts crossing over and I start seeing a lot of selling pressure at this key level, and I'll be placing my stop loss either above the supply zone or above the last lower high, which is right here. Because this is the last lower high, you can place it above it right here. And then for my take profit, I'm gonna place it at the next key level, which would be all the way down here, because whenever price gets down here, it always reverses. Come back down, reverses. Come back down, reverses. So this is like a little support area that where I know that price is gonna start reversing. So that is where I place my take profit. Let's look at how this trade plays out. It's a very nice 1:4 risk to reward ratio trade. And as you can see, price ended up collapsing and we have smashed our take profit. This is a very nice ranging market trade setup. So you can use this strategy when the market is going sideways. That is the beauty of this strategy. Here's an example in an uptrend. So you can see right now price is in the uptrend because price is making your higher highs and higher lows. And you can see clear as day, price is going up. So this is a trending market. So this strategy also works when the price is trending. So right now we are in the uptrend and we want to identify some sort of demand zones that show us that, you know what, price is going to bounce up even further. So at this point of time, I have spotted a demand zone at this area here, because you can see this is a new higher high and price is making a new higher low at this area. So somewhere around this area here is a new higher low. Remember your market structure, guys. So at this point of time, I've spotted a demand zone somewhere around this area here. How do I know that? Because if you look towards the left right here, you can see there is multiple green candlesticks in a row, which show us there's a lot of aggressive buying at this area here. So since there's a lot of aggressive buying and there is multiple green candlesticks in a row, we know that before this area here, before this up move started, right around this area is your demand zone. So at this point of time, I'm gonna be waiting for price to come back down to this area and give us the two confluences that I just talked about earlier before I enter for the trade. I'm gonna go to the 15-minute time frame to look for my entry. So I'm still gonna be patiently waiting. And right there, ladies and gentlemen, right here, this is where I have entered for my buy position, because I see this huge green candlestick, huge bullish engulfing candlestick, which tells us there's a lot of buying pressure. And at the same time, there is also a moving average crossover right here. You can see the candlesticks are going above the black line, which is the moving average. So I'll place my stop loss below the demand zone. For my take profit, I'll place it all the way up at the next key level, which will be all the way up here. So if you are unclear on where you should place your take profit, always look towards the left, right? Look towards the left to see where price last stopped at. So this is the point where price went up all the way up here and then start reversing. So this is where price last stopped at. So you can place your take profit right here. So right now, let's see how this beautiful trade goes. Oh my god, I just burped. You can see, let me just speed it up a little bit by going to the 1 hour time frame. You can see price eventually went up to smash our take profit, making this a very beautiful trade. So this is more of a swing trade. It took place over a few days, right? Inside this tutorial, I'm not only going to show you a swing trade, I'm going to show you how to scout using this strategy also. Here's another example, but in a downtrend. So you can see right now, price is in a downtrend because price is creating your lower highs and lower lows. So it's a very clear as day that price is going down. So at this point of time, price has managed to pull back a little bit and it's creating your new lower high. So I'm going to be looking for my supply zones, and I can spot like a little supply zone somewhere right around this area here, because whenever price gets up here to this supply zone, it always collapses. So you can see one time price got up here, went back down, aggressive selling. Another time price got all the way up here, same thing, aggressive selling. multiple red candlestick in a row, and the third time, same thing, multiple red candlestick in a row. So now I know that this is a very strong supply zone and price is creating your lower high. So at this point of time, price has managed to come up to our supply zone, but we still do not want to enter yet, because remember the two confluences that you must look out for before you enter for the trade. So right now we still be patient and wait, and as you can see, price has managed to get all the way up there and eventually break out of this supply zone even. And now let's look at what price does. You can see price went up even further, breaking out the supply zone. This is why I ask you guys to be patient and wait for those two confluences, and do not enter immediately when price is at a supply or demand zone. Because let's say you enter for a sell immediately when price touches this supply zone, so somewhere right around here, you have gotten stopped out and lose a shit ton of money. That is why you guys have always got to be patient to wait for the perfect trade setup before you enter for the trade. So right now we still wait, and you can see what's this, ladies and gentlemen. This is the moving average crossover. The candlesticks are crossing over the moving average at this point of time, and we can also see a candlestick pattern being formed somewhere right around here, somewhere right around. There we go. Price is giving us multiple red candlesticks in a row at this supply zone. This tells us there's a lot of aggressive selling at this point of time. So at this point of time, this is where I will have entered for a sell position somewhere right around here. And I'll place my stop loss above the supply zone, or rather above the last lower high. So you can see price is creating a lower high, and where's the last lower high? Above this last lower high right here. And you don't want to place it super tight like this, because price is gonna easily go up there, stop you out, and then go in your way. So I'll place it above the last lower high or above the supply zone, and I'll place my take profit all the way down at this key area right here. There's a very strong support area being formed at this area somewhere right around here, because whenever price comes back down here, it always reverses, come back down, reverses. This is a 1:2.5 risk to reward ratio trade. Let's look at how it plays out. So you can see price actually reverse all the way up here. So if you place your stop loss super tight like this, guess what? You have gotten stopped out and you have lost a whole lot of money just to see the trade go in your way. Let's look at how this trade play out. And you can see price like continue to go down and ultimately smash our take profit right around this area here. It's a very simple supply and demand trading strategy that will allow you to make $1,000 a day trading gold. An example is, just look at this trade. This trade, in this one beautiful swing trade, you have caught over 300 pips. 300 pips, guys. And if you use a lot size of 0.1, that would be $3,000. You could have made $3,000 over the span of what? 3 days? Making it $1,000 a day. That is absolutely crazy, guys. Now here's an example in a reversal setup. So you can see price has been going up here, and then it reversed and head back down here. So right now there's a support area being formed somewhere right around here. You can see whenever price gets down here, it always go back up, right? It always like go back up. So there's a very strong support area right here. This is also what we call the demand zone, because if you look at this area right here, you can see there's 3 green candlesticks in a row, which show us there's a lot of buying pressure at this area. And if you look towards the left, whenever price gets down to this area here, it always goes back up. So at this point of time, I'm gonna be waiting for price to come back down to this demand zone and then enter for the trade. And a lot of you guys will commit this mistake where you see there's this up move at this supply zone and you immediately enter for a buy, because you assume that price is going to reverse right now and it's gonna like start to go up to the moon, like go up in a straight line. But that is not what the market will do. The market has to retest this level to tell you guys, or rather to show the market, that this level is a solid demand zone. So right now, like I said, I'm going to be patient and wait for the price to go down to this demand zone, and then that is when I will enter for a buy. So right now it's still wait, and you can see price is starting to come back down. Okay, you can see it came back down to retest our demand zone. So at this point of time, we still wait for our two confluences, remember, because you do not want to enter for the trade immediately when price touches the supply or demand zone. So you still wait somewhere right around here. Yup, you could have entered for a buy somewhere right around here when you start seeing the moving average crossover and also a big green candlestick right here. And you will place your stop loss below this support area, and for your take profit, either place it at where price last stop at, which is right here. Could even place it at 1:2 risk to reward ratio like this. And let me show you how this beautiful trade play out. You can see price eventually went up to smash our take profit. And you can see when price got all the way up here, it actually started reversing. So what you could have done is you could have manually closed the trade somewhere right around here when you start seeing price is like reversing, making your red candlesticks, forming your double top. So this is where you could have gotten out of the trade. The moment you start seeing price like reach near your take profit, but you start seeing it reversing, that is when you can take profit. Manually close the trade. Do not be dumb enough to hold the trade all the way to your take profit if you start seeing that it's like reversing near your take profit. And like this video if this video is helpful, and click on that subscribe button. And remember, you're just one trade away. Mwah.